What's cracking, investors? I apologize if the title seems a little clickbaity, but it was an actual 70% gain on the calendar spread that I said I was going to do. I promised last week I was going to put on a calendar spread, and I just closed out the trade. So I'm just going to give you a quick update before I go into the normal account review. So here it is. I entered at 106. I'll scroll up a little bit. An Apple long put calendar spread. I did a couple videos on calendar spreads last week, and this is my follow through. It turns out to be a profitable one. My first one on this specific account. And I suggest that you guys can try it if you want to have some fun. It's not guaranteed that you're going to win or to have a 70% gain. But I think it's one of the easiest ways to get a 70 or plus percent gain for a trade. In fact, I actually recommend exiting this at around 20 to 50% gain. Don't get too greedy and wait till the end of the week, because most of the volatility happens, late Thursday, Friday. So you may actually lose all your gains from the beginning of the week. Sometimes Tuesdays is pretty volatile, but if Tuesday is a bit volatile, then it has a chance to recover later in the week. So 106 bought and 175 sold for about a 70% gain, plus or minus a couple percent there. So that is the trade. If you want to try it, go ahead. You can look back in the videos to learn how to put it on. And I actually really like this trade. I think I might put on some more trades with a larger amount if I see a good opportunity. Obviously, in retrospect, I should have bet my entire account on a 70% trade, right? But that's just not how reality works, okay? So you can't have all your trades win. But I think if I scope a nice opportunity, I might do another one, or I might even do like 5 of them at a time. Maybe I can even spread it. I can do a long put calendar spread, if that makes any sense. I'm supposed to do a video on the drawbacks, the benefits and pros of calendar spread versus iron condor. I'm just going to list one difference right off the bat for you guys to consider. And that is that iron condor, you can kind of modulate the window of profitability with your spreads between the credit spread and the put whatever spread, and you have more control. But I think it actually pays less, all right, because you give up something. You always give up something to gain something else with your option plays. Like, you'll never have a free lunch, okay? So depending how you want to stretch and contort your profitable window, I mean, there's some option strategies that are just dumb and not very profitable altogether, so that's true. But there is a reason why all these strategies exist, and the reason is expression. So a trader needs an accurate expression of their views, and that is why all these strategies exist. That's why options are so versatile. They can be extremely safe and they can be extremely risky. It just all depends on how you set it up. So that is the trade update. 70% gain. That's like $70 for 2 or 3 days worth of doing nothing and risking about $100. By the way, it's not a full risk. It's not like regular options where the premium completely disappears on the calendar spread. You're actually going to get some of that back. It just may be out of the profitability zone at the end of the week. So I encourage you guys to look into it. I think it's a very beginner-friendly strategy to use. I use it myself. It's for beginners, it's for experts, it's for intermediates, it's for everyone. So you can put it on, learn how to put it on, and you're going to have fun doing it. I recommend it. So next, I'm going to do an account review. So I'm sitting at $177,600 at the moment. It was a kind of a down 0.72% day. On the week, I'm still up 0.54%, so that's cool. 1 month, 17.26, 3 months, 2.79, year to date, 30%. So these numbers are pretty accurate because there's been no money added or taken out of the account in these time periods. Even the 1 year, there isn't any money added or taken out. So the 1 year, I'm sitting at minus 6.9% year over year. And the all-time chart is going to be very, it's not going to be that accurate. I'm going to stop showing these probably pretty soon because they're going to be really inaccurate. But 146% gain. I started investing into this account somewhere around August 28th, 2018. And the reason why I was flat before that is because there just wasn't much money in there. There wasn't any money. So I'm going to actually take out the extra money. So these percentages are going to look even more wild and probably more closer to the truth, but still just as irrelevant. So people want to see this chart, and I understand the appeal, but it's not really as meaningful as one might think. So this is my cash position here. I'm sitting at 49,732 now because I cashed out of that small calendar spread, and I'm earning interest on that. Currently, interest acquired this month is 19.33. Lifetime interest earned is 19.57, so I'm going to double my lifetime interest just in a couple of days here. And when it comes to the options, I'm looking at, I just sold an Apple call at 165. I don't think Apple is going to reach 165 by 217, so I thought it was just free money. So I sold a call against Apple that expires on February 17th. And there's the Baba spread and the PayPal spread, which are not going to yield me any money. There isn't much money tied in there at the moment at all. So don't even look at these. It doesn't really matter. My equity positions, Apple 400 shares at the moment, Realty Income, and Main Street Capital. All of them are in the red, around 1% today. Main Street Capital and Realty Income pay out a dividend every 15th of the month. You'll see it's pending right here for Realty Income. $110.34 on 444 shares, 25 cents per share basically. And then Main Street Capital is going to probably pay me around $240. Oh, $220, excuse me. It's right here on 975 shares at 22.5 cents per share. So 219, which is $1 and a little bit more since last time. Last time it was 218 and 28. So a little bit over $1 increase because I reinvested that money, right? I reinvested the money automatically on the 15th. And that may or may not continue in the future. But I've been reinvesting for about a couple years now. Maybe 3 years with Realty Income and Main Street Capital. And I've been buying additional stock every once in a while. And so it's getting to the point where it's the monthly payout, of 219 plus 110. I mean, that's $330. It's starting to become somewhat relevant cash, right? These things are just going to be spitting cash forever, basically. More or less, unless something really goes bad with the fund, like they change management, they decide to change strategy, it doesn't work, or they hit some kind of growth wall, which I don't expect hitting. But anyway, that's the account review. The next move. So the next move I'm basically doing is, as you may know, and I keep talking about it, I want to prepare people for it in case they don't watch these videos every day. Why aren't you watching every day? What's wrong with you? So in case you haven't been keeping up, I'm going to be removing $42,200 out of the account. So it has that $30K starting point like I envisioned in the beginning. I don't want to have the added money in there. I realize it's going to screw up with the percentages. The percentage is probably going to look better than they otherwise would be. And that's true. However, I think I should move that money to a different account. I have a couple other accounts that I manage for myself, and I have a retirement account, and then I have a separate account. Probably going to put that money in there, but definitely keep this one a little bit pure. And I used to do a lot of experimentation here, and I still do. I like to do experimentation on this public channel, on this public account, because it's fun to share it with people, right? It's fun to play around and try out different strategies and being able to share it with anybody who wants to see. Like this calendar spread for example, like I did a video on it, and then I'm like, okay, well, I'll just try it out. I've done all kinds of crazy stuff on this account before. I've levered up to the max. I've delevered to the max. Like, I've done all kinds of strategies. I've bought and sold things like major puts and calls that some of them worked out, some of them didn't. Aggressive strats, like passive strats. I think everything that I'm doing, even if I'm very experimental, I'm pretty confident the account's not going to go to zero. Even though they had a couple scary moments. One of the scary moments so far was in March 2020, of course, like everybody else. It was pretty scary. But I actually kind of like the environments where it's really depressing and scary, because I know that there's a lot of opportunity on the other side. So I guess I'm segueing really nicely into market thoughts. Speaking of, depressing periods providing a lot of opportunity, of course, vice versa. Whenever there's a lot of hype and a lot of overbuying and a lot of optimism, there's, the next down leg organizes itself and prepares itself. It brews right underneath all that optimism for the next swing down. Markets go up and then they go down. They never travel in a straight line, right? And that counts in short term and in the long term and in medium term. So what I'm seeing here is, if I go to the SPY, for example, let's go to the SPY. Let's compare the SPY on a 3-month basis. So I'm 3 months, 2.79. 3 months. Oh, the SPY is beating me. Mother. Okay, so anyway, if we pull out a little bit on the 1-year chart or even the 5-year chart of the SPY. So here's this big drawdown that we've been having. Let me see if you can see that all right. Yeah. Big drawdown that we've been having since December, 2021. Basically the entire year of 2022 has been in a bear market, except like that rally in October, November, which kind of mirrored the one in July, August. And now this dip has been pretty short. You see, it's a short dip here on December 23rd, and it resumed a bullish pattern immediately. So a lot of technicians actually spotted that, and they decided, okay, we've broken out of a channel or what have you, or some moving averages or whatever the hell they look at. And they're like, okay, well, has to be the beginning of a bull market. So there needs to be a little retest of the line that I can't draw right now on Robinhood, but I'm sure some technician can. So after this retest, it's supposed to be like clear skies ahead, but I'm not feeling that. Like, obviously my feelings have no justification over any kind of analysis, like fundamental or technical analysis, but there is some fundamental factors going into this. Okay, so overexcitement about recent events, about positiveness over things like warm winters in Europe or reopening of China, and all this adrenaline going on in the markets, that things are like looking up. But I think that one factor markets are not discounting enough is the reality that the Federal Reserve rates are still going up. Like, it's not like banks around the world are easing or anything like that, okay? They're just tightening less fast. It's a mistake that markets were doing, the other way around whenever central banks were easing. And I think the markets are doing the same exact mistakes now. Now, obviously, I'm not smart at the markets. I'm going to play the markets as they are. But I do know that there's a reversion in the mean short term when we look at markets, and there's reflexivity in the markets. And so those two forces, I think, in the medium term are stronger than, any kind of trend, change or seesaw change that technicians or fundamentalists envision. Like, changes just don't happen that quickly, especially when we're talking about entire markets, entire economies. So markets tend to overshoot and overcorrect all the time, and I don't think this is any different. So even if we continue our bullish pattern here, I know that we're going to be going down and trying to the markets are going to go down and give us better buying opportunities later in the year. So that's kind of what I'm betting on, actually. I don't want to use up too much of the capital right now and lever up, because I'm kind of waiting for that moment. I've used this upward impulse on the markets to deleverage, and I want to go hard and go on margin again once things start falling down again and some panic ensues. And this time, the lesson that I've learned, okay, is that I do shit too quickly. I'm trying to go into the markets way too quickly when there's a downward move, when there's a slide, and I end up getting my hand bit, all right? So I need to wait it out until things calm down a little bit, at least, before I start going full levered. I go too hard, too quick, and that's been hurting me in the past. So I'm telling you my plan right now, and that is what I'm going to try to follow through with when the opportunity comes. I'm not going to try hard-handed and grab as much cool and undervalued stuff as I can. I'm going to try to wait for the market to cool off and see if I can learn from my previous mistakes. So hopefully this video will help hold myself accountable to that. I'll look back to it and see if I'm able to pull through. All right, how am I going to tell if it's too deep or not? Probably the decrease in volatility, the change of change, the change in rate of change. Okay, that's how I'm going to be able to tell. All right, if it goes from exponential to less exponential to less exponential, and then that's probably when I'm going to jump in. All right, that's it for today. Hopefully I'll make another video soon. Good luck on all your trades. Hopefully you'll had a better performance than I did, and you're just totally enjoying this whole entire investment process, and maybe even try the calendar spread. If you did try a calendar spread, please write in the comments. Let me know and how it went, or if it's still going. I'll probably put on a few more next week. They're kind of fun. All right, peace out.